I have to say, welcome to the show instead of a good morning. You know what we're going to discuss at the top, and then we'll move on from it. You were looking for a dip in the chips? Well, you got it. We're on the rebound here. Let's see how much of that move on the downside we can get back. Not much earnings. CCL will probably surprise us, but we won't be on the air. Little economic data at 8:30. Not all stocks are down yesterday, folks. They're buying some value stocks. We're going to figure it out on this Tuesday. It's pre-market prep.
Welcome to Benzinga's pre-market prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right, investors, we're up. We rebounded off that late day swoon up 9 3/4 handles 55.2675. The buck holding steady over 105, up 13 cents at 105 1/4. TLT just flat here, hanging out near the high of the recent rally. Crude pulling back 65 cents at 80.98. Gold in the red by $1.50, 23.42.90. Silver flat 29.55. Bitcoin rough couple days, but reclaiming that 60K level in the futures. It's up just over $2,000. It's 61,185. We'll bring in Triple D. We'll bring in AB and Dennis. Not the result that you wanted, but one hell of a series.
It's a great series. The team played hard right to the bitter end. They had a huge, couple chances in the last 5 minutes to tie the game. Couldn't find the goal. You got to hand it to Florida. The defense was absolutely incredible. I mean, I think Bobrovsky was good in that game, but the defense was incredible. They made a couple saves in the last 7 minutes where Bobrovsky appeared to be out of it, and the defense blocks a shot going in the net twice. So defense was excellent. I mean, you come close. The good news for me is I have a lot of experience with my teams losing. So it happens to me every single season, just usually not in this fashion. Very, very much like the 2006 Stanley Cup win, Carolina over Edmonton. Game 7, we came up a goal short there too. They did get the empty net goal in that game, but kind of reminds me of that. It's just that empty feeling. Joel, you know this feeling.
Yeah.
Obviously,
oh, boy.
If you're a hardcore sports fan, you get this feeling almost every year, except it's just not this. Like your hopes were so high. You're basically a 50-50 shot from winning a championship, and then it's just over. And you're just like, it's just empty. That's what it feels like.
I have a question. I have a question for you, Dennis.
Yep.
In hindsight, now that we know how the series ended and everything, went the way it did, would you have rather just had the Oilers lose Game 4?
No, because then all the friends would just be rubbing your face. Holy, what a no-show. It would have been all the heat you'd take from the buddies. At least this way, they showed up. They came back, and that was their season. The season started 2-9. They were down and out of it, and and then they obviously changed the coach, and then they were the best team after the coaching change in the league for basically the rest of the way. But it definitely not. I'm glad it happened this way. Even though it got my hopes up, it was still like you'd still have that empty feeling. It would feel worse to get swept. Like you didn't even show up. You get this far, and then the team is just that much better. It didn't look like the Panthers were better than Edmonton. Both teams were really good teams. That game could have went either way. Obviously, they started, a lot stronger than the Oilers took it to them, in games 4, 5, and 6. Game 7's a coin flip, and you're, on the road. Kudos to all the Oilers fans that showed up down there. Tons of Oilers fans, paid a lot of money to go down to Florida to actually watch that game. So we'll give them some props there too. But, congratulations, to the Panthers. And congratulations, Doug Sifu, obviously with Virtue Financial. Congratulations as well. But, let's move on from hockey. That's the last hockey talk for the season.
Last thing. No. Okay. Last thing.
Okay, go. One last thing. Say one more thing.
I kind of missed their second goal. I was doing something, and did Edmonton almost score, and then they there was a breakaway off that.
Yeah, no, they did on that goal. It's always the way hockey is, Joel. You have a good chance of one end, and then it comes down the other end and scores. And the winning goal was not a good goal. Like Skinner
No, I
would
know.
like that back. It went like he's just going out kind of catching. You need to get in front of it a bit. Make sure you block it. He honestly was like looking it into the glove and just actually kind of missed it. It was a really soft goal.
Okay.
So that's
like-
tough too, because
I
Skinner
like
has
that.
been notorious for letting some soft goals, but you can't blame it. You know, when you only get one goal, you can't blame the goalie. Goalie does his job if he only lets in two. Skinner was great throughout most of this series here, so it sucks that he let in a softie for the winner, but you know, he was good.
Perfect comment by Eric, and then we're moving on to stocks. Dennis, we are privileged to live a life so good we can
So
afford
true.
to get upset over sports. Right?
Yeah, so true.
There's a lot more things. Okay. All right. Well, I guess I got one more thing non-sports related. Today, June 25th, right? We all know what that is. The two very important things happened on this day. In 1992. Big hint there. Big hint. Big hint. One's market related, and then the other's non-market related.
Okay.
Any guesses?
No.
First one, which is
a big crash in the market.
no. I got married.
In 1992?
The S&P 500.
Dennis, you should get this.
The S&P 500 was introduced.
That you looked it up. The index.
No, I
futures.
did not. I did not.
The
Globex.
futures, that's when the futures came?
Well, that's when they
1992.
came on Globex. That's when the original Globex.
The overnight
was.
24-hour market.
Yeah, and you had to be a member. You had to have this big old machine in order to trade. So that happened on June 25th, 1992. And G must remember, or she was listening to Stocks and Jocks. Dana's 32 today. Dana was born 32 years ago today.
Wow. 32 years ago.
Yep.
Today? And that's today?
That's today.
Happy birthday, Dana.
Yep. Big D, happy birthday to her.
Holy 30. Man, I'm getting old, because I remember
I know
these
you
kids
are.
were like little
I know.
kids running around the Bright Trading office in Southfield. Like they were young, like as young as my kids. And now they're grown up and married. And I'm like, or at least Dana's, that's unbelievable. So, yeah.
Okay.
That's something that, you know, the years fly by. I don't know where they go.
Yeah, either do I. Okay, let's go. Let's go, AB. You are driving. This is the AB show. We're just going to fall into place.
Yeah, because I'm
AB.
depressed, so I'm just going to sit back and just answer questions.
Well, let's before we get into today's headlines, talk about yesterday's price action, because if you look just, at the S&P 500, NASDAQ, okay, it was a pretty tough day, but the Dow ended up closing up more than 0.5%, and this has been the trend, I guess, of the last 2 weeks, where the value stocks, the Dow has kind of been outperforming the NASDAQ and the S&P 500, which has not been the case this entire year. So I mean, to me, it seems just like a lot of rotation, people selling their chip stocks, their high flying tech stocks, and getting into some more of these value names. So again, it was just kind of a mixed market yesterday. I thought that price action was interesting.
And again, this is the market that we're in. It's like NVIDIA's loss is the market's gain. There's so many people it's like NVIDIA versus the market. It's so weird, Joel. And obviously the S&Ps follow NVIDIA to a certain extent, but there was so many stocks that were up yesterday. So many stocks having great days yesterday. And it was finally like a little relief rally for so many other stocks. And you know what? You wonder if that doesn't happen the opposite today here with NVIDIA bouncing back. So, I mean, even if you don't care about NVIDIA, even if you don't watch it, it's just moving not even tech stocks. It's moving non-tech stocks, because when NVIDIA shows weakness, you got stocks like Amgen, which obviously is in the NASDAQ, just ripping higher because they're like, okay, well, here we go. We're going into the value trade here. We're selling the higher P stuff, going to the value trade. And this is the value trade names. And we talked about that for a couple of days here. Now overnight, you get this NVIDIA wicked reversal here, because NVIDIA was down another $3 last night, trading down to 115. Show the 24-hour chart if you can there, Joel. On Robinhood last night, obviously trading down 115 too, but it was trading down at 115 a quarter on the regular exchange. This wasn't just a Robinhood thing. This actually was trading lower, even in the session, in the regular session as well. You'll see it there. And then we just started buying the dip after 4:30 this morning. They started coming in They decided they're going to buy the dip in NVIDIA, and now it's reversed completely, and it's rallied $6 from those lows, which is an incredible bounce here for NVIDIA really here. So keep an eye, obviously, the other stocks that are going to trade with that are SMCI. We know those BRT. I'd argue that Bitcoin is trading with it as well. That Bitcoin is now trading with NVIDIA. So you can see the weakness last few days. What's happening to Bitcoin? Well, NVIDIA started rolling over, and Bitcoin is like a NASDAQ stock, and it trades with NVIDIA. It's that growthy, everybody's talking. You got to be there. Bitcoin, it's going to be all, I don't think we're all going to transact in it, but there's no argument that that Bitcoin and NVIDIA, put those two charts on each other, they're not identical at all by any means, but there's definitely some type of relationship there, especially lately.
Yeah, and specifically, yesterday, if you're looking at what investors were buying up as NVIDIA and these other stocks were selling off, if you look in the energy space, Chevron, CVX, Exxon, XOM, Oxy closed up nearly 4% yesterday, which means if you go and look at how Mr. Warren was doing, pretty good day for or Berkshire closing up more than 1%, which 1% doesn't sound like that much, but 1% of how much money Berkshire has under its portfolio, that ends up being quite a bit there. And then let's move into, I guess, some headlines we have this morning. We do have consumer confidence coming out at 10 a.m. We'll hear from Fed Governor Lisa Cook later in the day. But today we are getting some earnings back for the first time in a while. We'll hear from FedEx. We will hear from Carnival Cruise Line. So good to at least get some companies that we recognize back on the earnings calendar this week.
Yeah, like we come in, obviously July is going to be the start of the next earnings season. So you got a couple weeks here yet before we're going to get into. But we had an earnings warning last night from a company that, what? It's not surprising here, and it's Pool, one of the great ticker symbols. I mean, they obviously sell pools, and they got the Pool ticker, POOL. I mean, I don't know if anybody's surprised by this one. This stock has been trending down for the last few months. We've been talking about big ticket stuff, just not selling. The rich people are always going to be able to afford their pools, but the middle class, is just struggling a little bit more. And just imagine, you're struggling a little bit more. The last thing you're doing is going spending $30,000 on a new pool. So I think that's where
30? 30?
I don't know what they are. What are they?
I don't know. I haven't
50?
seen
I don't know.
I mean, is that a little one you put the kids in, the little plastic ones for 30 grand?
Yeah,
I mean,
maybe 100 grand, 50 grand, 70 grand.
But
I don't know.
point.
Just digging the pool and getting the basic quotes with nothing around it, probably. But in any regard here, this is a bigger ticket item. That is a luxury item. Luxury people, rich people are always going to buy. But these companies miss earnings when the middle class are not buying. And I think that's where we're at here right now. There was also probably some pull forward in COVID, but I mean, COVID's so far behind us now, it's hard to argue that. I would just say the consumer is a little more stretched, and they're not going and having, 50 or 60 or 30,000 or whatever you want to say. They don't have that kind of discretionary income, the middle class right now. And so stocks like this, warning, not surprising to me.
All right, technically speaking, we are back at levels you haven't seen since late 2022. The nets, well, there was a couple lows. I mean, if you're looking at this at, right after the warning came out, you saw 2 monthly lows at 296. But that pierced that, taking it down to 290, 296. You're $10 off it. I think if you wanted to buy it at that level, you might have a little bit of a harder time when you pop off an after hours low like that. It kind of thickens up on the way back down. Long term, I mean, it's just a horrible looking chart. If this thing doesn't make a strong challenge to hold this 290 to 300 area, I just don't like the way it looks between 200 and 300. And this is a big down move and takes a long time to recover from them. So Pool, is there anything? What's the other pool supply pool? Leslie's.
LESL.
That's got to be.
It has not done well. So this stock.
Oh
looks
yeah,
like
Oh,
this is again what we're talking about here. He had a lot of pull forward during COVID. Stock. Yeah, everybody's getting pools. Nobody's ever going out again. Nobody cares. They're just staying at home swimming in their pools. Well, that changed. The pandemic ended. $30 to $4. Story over here.
All right. Any other plays off this? Any?
I think you just got to keep in mind. I think it's just overall that
Okay.
Again, the consumer a little more stretched than we, there's still money to do things, but they don't have big bucks. So we've got to consider that. And that's why I still think the automotive's going to struggle here. I know we're all GM and saying, yep, turnaround story and all these cars. I think, Toyota is telling us a different story here. And to compare Toyota to Pool is a weird comparison. But what I'm trying to get at is I don't think people have a ton of money to go spend $100,000 on something, or 50,000 or 60,000, whatever it is. You start getting into these discretionary purchases, and a car is discretionary to a certain extent. You can fix up your old car. You don't have to just go buy the new one. So Toyota, $250 back in April. It's $198 here now. It is bouncing this morning at 206. But I mean, there's another story happening here, just quietly happening. General Motors been resilient, holding on near the highs. I would sell General Motors. I know everybody, the valuation is cheap, but it's been a value trap. It's had a good bounce back. Ford has not participated like GM. So maybe GM is coming best of breed here out of the big three. I'm not sure, but Toyota has sold off significantly. Ford has not participated. We know Tesla is struggling right now. The core business is struggling, even though the stock is holding up well because they got so many things coming. The core business, the cars aren't selling that well. So I think we're at the same thing. That Pool just tells us that the consumer is not buying big, expensive things right now.
If you saying the GM is a sell, right? Just based on, would you say?
In my opinion, yes.
No, your opinion, but I just can't get my eye off this First Solar. I mean,
hard to sell best of breed stocks, but you know what? This chart's interesting, Joel. Look at the 250. So it's an interesting chart you bring up. Try to go in a little bit. The top right chart we're looking at there.
Yeah.
You have multiple lows right above 250. That breaches 250. Then you're in the whoosh area, because we went from 200 to 250 in 2 days. What goes through an area quickly up can quickly go through an area down. If this thing, and it's support until it's broken, there's clearly some buyers here in the low 250s, starts to breach 250, you got problems, which probably is a good segue into the disaster stock of the day.
Disaster.
When you think it's Pool, it's not. It's the stock that has been a walking disaster here for the better part of 2 years now. Solar Edge, just an epic disaster. Stock, once upon a time, people were saying this was best of breed. Obviously was not the case. $389 back in 2021. It is now $27. It is down another 18% here today. Just when you think it can't get worse, it does for this stock. AB, give us the headline. It looks like more dilution for those loving shareholders.
Dilution here?
Yeah, so Solar Edge announced a private offering of $300 million convertible notes due 2029. So, it's not a good sign anytime a company does an offering. It's definitely not a good sign when a company does an offering once the stock is already down as much as the stock has been. We've talked about how interest rate sensitive this whole clean energy, clean tech space is. And really in the solar space specifically, I mean, you really have a lot of companies that are struggling. And then, you guys were just talking about First Solar, a couple companies that have kind of been able to hang in there, whether it's Enphase, First Solar, but you look at like a Sunrun, you look at a lot of these other stocks, and they just have not done well over the past few years whatsoever. And I think, I mean, from what I can tell, like the residential solar play has kind of died out. Like that just has not caught on as a viable business where people are buying solar panels for their homes. I don't think the companies make enough money for it. I don't think there's enough return to the people that are doing it. There may be some companies that are focused more on the commercial, industrial space that are interesting, but I think the residential solar play it might as well be dead now.
You want to talk about discretionary purchases. This is like at the top of the list, and interest rate sensitive, top of the list. And you know what? Interest rate cuts may be coming, but they may not come soon enough for some of these companies. And again, First Solar has been its own animal. It's been unbelievable, but ENPH, $300 and some, now $106. SunPower just looks like it's going under. I mean, it went from $50, it's $2 here now, just trying to survive. Sunrun, $100, it's $13. Canadian Solar, CSIQ, 65 to 15. These stocks just are all disasters. It's even more impressive how First Solar, has just bucked the trend. But I mean, you even look at the TAN, which has them all in there, and the TAN, $120 a share back in 2020. It's $42 here. Interest rate sensitivity, consumer a little stretched, just everything, perfect storm for them. And Solar Edge doing, a big offering, big convertible down here is telling you that this company is trying to get money to survive. So I think it is a question of whether this company can survive now. When a stock falls 93% from the highs, you start thinking about survival. So obviously they want to raise some money to try to go through this tougher period that they've been going through. But, the last few earnings reports, they've lost a lot of money here, Joel. This used to be, looked like a value stock at one point in time. This is definitely your definition has been of a value trap. If interest rates start going down, maybe they can turn around, maybe they can find a way. But, when you're doing convertibles way down here and you're burning cash as quickly as Solar Edge is burning them, and you have $628 million in debt with only a $1.7 billion market cap, I mean, the debt load is pretty heavy here for this company as well. Burning cash, interest payments, there's a lot of problems here at Solar Edge.
All right. Other headlines this morning we have in the airline space. And no, it is not from Boeing for once. We've been a little accustomed this year to, Boeing hitting us up with some not great headlines. But this time it was from Airbus giving us a warning here. And you do have Boeing getting hit on this as well, down another 1.2%. Also, some Boeing specific news we can get into. But let's go to that Airbus news here, trading down on it. Airbus is it a French company? Where is it located in Europe? Somewhere over there.
I think it's Paris, isn't it? I'm not 100% sure.
Paris. Either way, Airbus fallen more than 9%.
I think it's France.
After
Blagnac, is that how you say it? Blagnac, France is their headquarters.
After cutting guidance, basically saying some short-term setbacks, but they still have a strong long-term outlook, some supply chain woes. So either way here, you would think that all the Boeing mishaps and companies saying, oh, we want to buy Airbuses instead of Boeings, you think that'd be great for Airbus.
Yeah.
But really the company not doing that great either, off its highs. I'm looking at the chart right now from $47 down to $37 here. Again, trading down about 6% this morning. So not great news if you were just trying to buy Airbus to make up for Boeing's weakness.
Part of me thinks you're at a point where Boeing, all the bad news is priced in. I don't know about Airbus. I don't trade the European stocks. I don't even care. What's this mean for Boeing? And Boeing also has a headline here where they're trying to buy Spirit AeroSystems, SPR. And SPR, they've made an offer to buy SPR at $35. And you can ask, well, why is SPR trading down at $31.90 if Boeing's making a $35 offer? Well, multiple reasons. Main reason is this administration doesn't approve anything. Are they going to go and approve Boeing to buy their major part supplier here? Probably not. And second thing is time value of money is not zero anymore. So if I'm a risk arb, I'm not paying 35 or 34 or even 33 for a $35 takeout price. So I'm not surprised the stock is trading down on a potential $35 bid from Boeing, because I don't think the administration will approve it. I think that's the antitrust issues. They're blocking iRobot and Amazon. They're going to try to block Spirit AeroSystems and Boeing probably if this deal does even, it's just an offer, so there's no official deal here yet. What's this mean for Boeing? What's this all mean for Boeing? You look at this long-term chart and you think, wow, what a disaster Boeing has been. But then you look and you still got the duopoly there happening here. Obviously we're going to continue to fly. We're going to continue, I think Boeing has a lot of bad news already priced in. Not saying we're going in and we're loading up Boeing at $177, but it doesn't feel like it wants to go down anymore. It just doesn't feel like, even though it's down $2 today, it doesn't feel like, this is just a cascading death trap. Boeing isn't going to go off the board, I don't think. I don't think we're going down at Boeing. I don't think we're at that situation at all. I think there's going to be a buying opportunity here in Boeing, and I think it's going to be sooner than later.
Interesting chart. I'd just say since the end of May, you have basically a trading range from 170 to 193. So if somehow it can bust above this 193, I think there's a lot of room on the upside. Or if you're playing a long up to that area, daily highs are there, monthly highs are here, and on the downside, support is coming up from that low of the move in April, moved up to 170 in June, and then I know there was some bad. Now it's just now they're creeping in the lower 170 handle. So I think buyers are stepping up here after that low that you had in April. Not quite at the lower end of this trading range here, but maybe look for this in the lower 170s, couple lows in the same area and turn out. I'm just Boeing. It's just such a headline. Like like every day. Not only is there a headline about the government, or there's a headline about the parts, or there's a headline about the CEO, and then you get a war. I mean, it's just such a there hasn't been a favorable news flow in this thing for a while. So wait for the news flow to turn, and perhaps you get a turn in the stock as well.
I wonder if Boeing could too kind of work around the antitrust concerns by basically saying that they'd be able to have more control over the parts coming from Spirit, and that it would actually help solve some of these problems that Boeing's having, and it end up being better for the consumer, because there are a lot of issues, and not with Spirit Aerosystems specifically, but in the airline space right now, there have been a lot of problems with parts where like different planes have been taken, apart, and they're found to have like counterfeit screws and stuff, and all this stuff, to where I wouldn't be surprised if maybe Boeing was able to pull this off. But again, like either way, when you're a company making the acquisition, a lot of times you do see weakness in that stock. But Dennis, to your point, like if we're not at the bottom here on Boeing soon in terms of like news cycles, all the negative news being priced in, then it's got to be pretty soon, because this has to be one of the most hated stocks in the market right now.
It is. It's like right along there with Alibaba. The only thing is Alibaba has actually been firing on all cylinders, where Boeing's had, so many missteps, as the management's had missteps and the CEOs had missteps. And I think you're making a good point. I think that would be my argument if I'm Boeing and trying to get this approved, from SBR, is like, hey, we can control some of these issues. These are a lot better here. So, maybe it can get approved for those reasons. But if you're buying Spirit Aerosystems, thinking, oh yeah, I'm going to make $3. I mean, you're going to sit around here, try to make 10% on this, hoping, that this deal can get approved and going from there. And that's your upside. Meanwhile, there's time value of money issues, and it isn't going to be a fast one. You have 5 point something, get over 5% sitting in cash. So me as a risk arb would say no thank you on SPR. But, I think you're right. I think there could be a chance the deal could get approved.
I know you
You have
guys
to
are
accept
talking
the deal,
about.
though, first, too. SPR hasn't even
Yeah, I
accepted the deal.
mean, you guys are. I know you're looking at it, the glass half full. Oh yeah, they'll be more in control of the parts and everything, but is that necessarily a good thing? I mean, having
Well, if the
more
problem is
control.
that they're getting these parts from the company and they
Well,
don't
they should figure it out when they get them from
fit,
SPR instead
fit,
of putting them on airplanes.
Yeah, I mean, I agree. But I'm saying if I were the lawyer for Boeing trying to get the deal done, that's the argument I would make. And the whole idea behind the antitrust laws are to help consumers. And so if they're saying this helps us meet that goal of helping consumers because they're going to have a safer flying experience, and who knows, maybe another Boeing headline that's going on right now, maybe someone in the chat can help me out with this one. I'm not a big space guy, but there's some astronauts like stuck in space because Boeing sent them up there, and then now they don't know how to get them down. So, sounds like something maybe they should have thought about a little bit more beforehand. But I think that's kind of that's always been the American spirit, right? Let's do it, and then we'll figure it out later, right? We'll figure out how to do it. So that might I don't think that's the one that's really impacting the stock, but just another thing going on right now with these astronauts up in space.
Good question from Kirk in the chat, and I want to address this, just going back a little bit. I'm going to put it on the screen, but he says, Dennis, when you're looking forward at companies that will report earnings, and I think this is, important because we have earnings season coming up here. We're going to get in the next earnings season. How many weeks ahead do you look? And also, do you scan, your favorites, or do you look at a larger group? I usually look at next week. I'm usually about a week ahead is how I usually do it. And what I do is I have my list. And, I write down all the companies that are going to report this week and the beginning of next week, usually always looking at least 5 days out. So like this week, I know, we have CCL obviously reporting this morning. It's been 9:15. FedEx is going to report here tonight. And then we have, big ones for Wednesday are Micron, AVAV, which I own the stock, so I've got that written down. And I think it's one that's got Momo stock to kind of trades with NVIDIA. Levi's going to report. BB is going to report. GIS is going to report. I do have long positions in some of these because you know how I like to buy stocks ahead of reports. And Thursday, we're going to get Nike and WBA and MKC. And what I've said for years on this show is that you see relative strength ahead of reports. And there's multiple reasons for that. One is media coverage. People are excited about, this company's coming up. They're going to report. They're getting talked about in the media. Two is if you're short a stock, you typically don't want to take it short through earnings. People who are short stocks, short term are scared through earnings. So you have covering that happens ahead of earnings as well. So I love being long stocks ahead of earnings. And I think there's a lot of money, easy money made there actually. Now, again, nothing works 100% of the time. Sometimes, I've been hit before where you have earnings warnings that happen too sometimes ahead of earnings. And that sucks. Remember that once I was long FedEx like 2 years ago and they warned like 4 days before the earnings report and bang, I'm long it because, I was expecting, an earnings drift higher and then they warn and it's not good. And stock gaps down like $20 on you. You're like, oh, so, nothing works all the time, but if it can work 52, 53% of the time, there is some money to be had there. But to answer your question specifically, I look about a week ahead and I write down all the big ones. And I don't usually look at the small caps, small names. I'm not looking at those. If those work, let me know. But I typically, it's the bigger companies like the headlines, S&P 500 names, or just names that are, well followed in the media. So, or well followed by social media. So that's how I trade that strategy. And it's one of my core strategies, which worked well for me for a long time.
A lot of it depends on the market environment, right? Too. I mean,
sure.
Yeah.
Bull bear market, the strategy does not work as well in. Bull market, the strategy does really well in because people are excited about stocks. You get a bear market, people are like, back 2021, the strategy wasn't working well at all because when people are getting killed in the market, like, I don't care what company's going to report. I don't want anything to do with it. Or people are selling ahead. They're worried that they're going to miss earnings. So, I mean, you actually could see the opposite effect sometimes in really bad bear markets. But usually, bear markets aren't, the norm. We're probably, and this would be a stat for you to find out, AB, how often is the market in a bull market and how often is in a bear market? I would say it's like probably 70% of the time in a bull market. The market tends to drift up over, and obviously, certain markets, like China, have been in bear markets for years. But over here in North America, the bear markets don't seem to last. It seems like more than, a year or two at best. So, historically, we're usually in bull markets, and the strategy works better in a bull market. So it's a great point, Joel.
All right, 8:34 a.m. Eastern. I do see our special guest of the day hanging out backstage. It is a T3 Tuesday, and today we've got David Prince, one of our favorite guests from T3. So without further ado, let's go ahead and give David our special pre-market prep welcome and catch up with Mr. Prince when we get back. All right, David Prince, welcome back to Pre-Market Prep. How are you doing today?
Good. Thanks for having me, guys. By the way, your voice, man, I was listening to you on something the other day. You are like made to do this job. I'm sorry, but I just had to say it. I was listening to you on some, I don't know, maybe it was Twitter, and I'm like, this guy has got the voice of gold. Anyway.
AB's got a radio voice. He really does.
I mean, he just does. It's so good.
He does. Yeah, he does. He's smooth talker too, this AB. He's good, man. He's good. That's why we got him. He's good, David. You got a good voice here too, though, and you got to pick in stocks here, David. So, I mean, first I want to get your thoughts. Obviously, we're talking video, we can talk, but let's talk overall market really here because it's such an interesting market where the S&Ps seem to be so resilient no matter what. You get a significant sell-off in NVIDIA, and it's starting to. The S&Ps have started to come off a little bit here, but it's like NVIDIA's loss is other stocks' gains. And we saw so many stocks actually having a really good day yesterday. At one point in time, IBM was way up. I mean, even in tech, it's like this rotation continues to keep stocks, and keeps the S&P high. What are you looking at right now? Like, I mean, because NVIDIA has been wicked, but what are you watching?
So the first thing is, I thought yesterday was one of the most efficient rotational days I've seen, like, in my career, maybe. I mean, so many people thought NVIDIA, if that happens, it wasn't a cute rotational day. It was biotech, it was financials, it was small cap, it was pretty broad, right? So what I see is a market that for me is not an investing market. Like when I look at valuations on what's working, there's not a lot I want to invest in. When I look at valuations on what's not working, those are about the only names I want to invest in, and yet they're not working. So I'm caught between being a trader and an investor. Long story short, it would be nice to say IWM is going to work, but we all know that a lot of these companies are not profitable, and it may not be that simple, even if we are going to cut rates. So I'm more of a trader here, just to really make it simple, right? I'm looking at like this type of volatility to me offers plenty of money to be made, and versus where I was 6 months ago, where I really saw a lot of names to invest in. Right now, I'm down to maybe 4 to 5 names that are priced right that I invest in, whether it's indexes or stocks, and now looking at trading opportunities like I thought NVIDIA was yesterday. If IWM starts to work, if XBI starts to work, but just a quick example, I know financials led us yesterday, but I bought JPM 50 points ago. I get it, it's one times book, all that good stuff, but it's had a big move. I'm not excited to buy it up here. So I'm a trader, that's where I'm at. I think based on valuations, I don't see a lot to invest in.
Do you find yourself when the market gets like this, David, trading stocks that you wouldn't normally trade, like trading some value stocks? Do you start dipping into what's hot? Like yesterday, energy was doing well, or do you stick to your normal list of names you know?
So that's a great question. I force myself, because if you stay in your comfort zone, you miss what's working, right? Like yesterday. So I'll broaden out indefinitely, but at the same time, like yesterday, here's like literally what I walked through. I was like, if I want to worry about making money today, I have to buy a financial on a dip, or I have to add to XBI or IWM or something. But if I want to make money the next few days, where's the best risk reward? I said, I'm not worried about today. I really see an opportunity in NVIDIA, 3 days down, 15, 16%. I'm not worried about today. So the answer is I'll broaden out. Example, I'm lucky this morning. Inner Circle, myself, we're all long ENVX. It's not a stock I typically would buy. I don't like these small cap story stocks. But 2 months ago, I saw a change. I think I told you guys about it. I saw a change in character. I saw certain types of news items that made me believe whether or not it's a real company or not, the stock's going to work. So yes, I broaden out when this happens, but I don't force it. Yesterday, I said, you know what? If I don't make money, it's fine. I'm more worried about tomorrow and the next day. So
where do you find a stock like ENVX? Because that's not even on my radar. I may find it from social media or something, but where do you find that from? Is this the T3?
Being old, being 54 and literally having a lot of screens and literally having a list of small cap story stocks. So if the markets change, I'm going to look at Snap. I'm going to look at ENVX. I'm going to look at, I don't know, let's say ones that actually matter. Powell is a big name for me. So I'm always reading, looking for an edge if there's something I can get. Like, I never get comfortable. I feel like there's always got to be something out there. So I'm not going to pretend I do it. A lot of people do it through like IBD, new highs, that sort of stuff. For me, it's like always on Twitter, always reading research. ENVX, 2 months ago, had a big OEM announcement. They didn't announce who the client was. Stock opened up 20, 25%, and it was on the highest gamers. I was like, I remember this story stock. I once bought it at 10, wrote it to 23 and sold, and just never looked at it again. And guys are loud on it, like some big names are in it that are on Twitter. And I said, when a stock does this, it's a change in character. If you look at a firm, when it gapped up, it kept going and went up 200%. If you look at Snap, same thing. I was like, this reminds me of the same pattern, so I'm going to follow it. And I stayed with it. And every dip I'd buy, and that's, I didn't reinvent the wheel. I just try and keep up to date with new stories. Like Hut is another, not a big small cap guy, but I know Hut because I got a buddy who owns 1 million shares. And it's like one of the leading names in Bitcoin miners recently. If you take a look at HVT, is it quality? No, but it's working. So I just try and keep myself up to date, because I always feel like if you get just comfortable with trading NVIDIA and Amazon and JPM, and eventually, like, they're not going to work. So my job's to kind of expand people's horizons and follow a lot of stocks. So long-winded answer, but that's how I do it.
And then David, we've got this QR code up on the screen right now to join your free webinar. So is breakthrough trading, is that something that you try to find these breakthrough, like breakout trades? Is that what that is?
I honestly don't know what that is. I'd love to answer it, but like, it's not a strategy of mine. What I will say though, and maybe what it refers to, is how to find an ENVX or even ENPH. I got very bullish, I don't know what that means, but ENPH recently at 112 to 113. And rather than say it's turned around and the fundamentals back it up, I said it's probably going to follow First Solar. It was a big win for me. I actually sold it early. It went to like 130, 135. I sold most of it. It went to 140. And also how to understand it's more of a story. The fundamentals don't back it up, so you do sell those. Last thing I'll say, how to find like an SMCI, right? Like, we all know what it is, but it was left for dead and no one cared about it for about a month. And then I'm sure, listen, you might have done the same thing, Dennis. I looked at it 2 weeks ago and I said, okay, every single name is going to highs. Today, SMCI at 800 is cheaper at 800 than it was yesterday because NVIDIA demands it. And there'll be a sympathy play and it will go up. And then to know enough to say, don't try and catch the top, because sympathy plays aren't backed up by numbers often or fundamentals. It's an emotional trade. You got to sell emotional trades. So that's probably what it refers to.
Got it. And then looking, since you mentioned SMCI, in the chip space specifically right now, we've had these, the dip is kind of getting bought today, but NVIDIA went down like 10% in the last 2 weeks. Do you think we're past the run up in these chip stocks and we're going to have some more consolidation or some choppy trading, or you think this was just a dip and we're going to go straight back to where we were, where these things seem like they're going up every single day?
I really think that it was a moment to take notice. Last Thursday on that pre-market, I had started early on Tuesday. I said, I want to stay along a little bit. I had a trailer left in NVIDIA long. I said, I actually see nothing here I'm excited about. So I actually kind of got net short for about 24 hours. I shorted ARM pre-market 174. I bought puts on NVIDIA starting Tuesday. That, like usual, I sold way too early, the 132s. Took some profits Friday, but the point was I wish I had them yesterday. And I think now they're trades, right? And I think they need to build. This is a monstrous move. I've been trading these since Whittington was the king of semiconductors and Niles was an analyst. Like, this. I've never seen a move in semis like this. Micron is awesome, and I expect great numbers. But come on, Micron and I was wrong, but Micron just had a move it hasn't had in 2 decades. So I think it's going to calm down.
People forget it's cyclical. People forget like DRAM Micron, it's so cyclical. And I've been burned in Micron, chasing it before. And this is the chase of all chases.
Yeah.
The
people
stock
don't realize
started the year around $65.
So tell me if you agree, because I just wanted to get this out. Yesterday I said, listen, we can chart. I do kind of want to buy Broadcom if it gets closer to that 1500. But make a long story short, I said, you can chart Broadcom, MU, ARM, or you could just figure out where you want to buy NVIDIA, because they're all going to still be pin action off of NVIDIA. So I looked at 3 days yesterday to the downside. I said, listen, I can't tell you this is the bottom, but what I see, if you look at the chart, is that 115 previous high, is that should be the bottom before we have one bounce. Then what happens after that, all bets are off. So I took a real shot yesterday. I was buying 117s. I was buying 118s. I was buying after hours 116s. This morning, you better believe I was up at 4 a.m. and between 121 and 122, I'm selling a lot of it. So I think we're in that market. And if I miss some, fine. But none of these are great investments. NVIDIA owns the world right now, and I think they're going to continue to. But that doesn't mean the stock can't pull back. I think this is a lesson for a lot of people that the free money moment may take a break for a while. And that's fine, right?
David, you mentioned that you were in and out of the NPH, and now it's trading. We've had some news on it. It's just really at a discount now. I don't know where you bought it before, but could you give us a technical setup where you dip your toe? You got a double bottom here at 105. Now it's come in this much. You go back to the well, or
no? It's a great question. I'll tell you, and to be really just direct about it. It was a big win. So when it pulled back from 140 to 123, 124, it was like near the 21 day. I bought some. And at 120, I said, this doesn't feel right. I'm actually going to take a loss. It's been a big win. Let's not turn a win into a loss. I took a loss, and Monday there was news. One of the major solar players in Germany lowered guidance. And if you can see, it took the whole space down. So here's what I'm going to say. I wasn't smart. Maybe I was lucky. It worked. I'm not going back to it. Like these cute stories, it's fine if fundamentals back them up to me and the stock's not trading well, I'll buy ugly. But if the fundamentals suck and the chart sucks, I'm not going to try and be smart. So I'm not going back to it. That's the truth. I may miss some, but I'll be okay if I miss it. Solar is really in pain right now. The whole industry.
Solar Edge today, David. I don't know if you're looking at this one. Convertible offerings down 19% again.
What is that?
It's like the most one-sided trade ever. The stock just goes down every day.
And when they do convert down here, what does it say, by the way? Right?
Yeah.
I mean,
they're telling me they need money.
Yeah. I mean, that's my point. It's like they're kind of desperate. So yeah, I'm staying away from this group. I got lucky. I'm not going back to it. And if I do, it'll be First Solar, and that'll be it, because at least it's the real profitable company in the space.
Best of breed. What do you think of the financials? I mean, the banks have perked up here quite a bit lately. I mean, Bank of America looks constructive to me. Obviously, a little bit of strength maybe off of NVIDIA's loss, but I'm just looking, just going through a few bank charts here right now. Goldman Sachs not far from the highs. Bank of America right there near the highs. Citigroup a little farther off, but a good day yesterday here. What do you think of the banks here?
Citigroup has been my favorite. I did get flat around 60. I was pretty large in it, low 50s. I think, right, here's how I look at it. If the market has more to it, I'm not excited to buy them. But at one times book, if they can take some of the stocks we're seeing that are leading, the Micron's higher, then who am I to say they won't take Goldman through this 470 area and go to 500 and JPM and Bank of America? So my answer is, if we're going to have elevated PEs, these guys are still reasonable, right? Maybe they're higher than they typically are, but they're certainly cheap, right? Relative to the market, I think they work. I'm just personally not excited to buy higher, but I totally get if they're going to start taking Micron up, if they're going to start re-rating Apple, if they're going to do all of this, if they're going to ignore Meta spending more money and say it's cheap and take it from 400 to 500, why the hell can't they buy, Goldman Sachs trading at one time? Well, Goldman's trading more than one times book now, but you get the idea. So yeah, they trade well. I'm going to probably skip the trade, truthfully. Not excited to buy them here, but they look okay. I don't see the risk reward being that good.
What about here, just the overall market, David? I mean, do you expect us to remain up here around all-time highs? Are you even concerned with that? Or are you more just worried about trading your individual stocks day in and day out?
Answer to that is to get net positive on my P&L week after week or month after month. I'm trying to look underneath and not pay attention to the indices, but I'm more bearish. Last week, I was short the Qs at 485, 485, 484 pretty aggressively a few times, including puts on Thursday. So my answer is like Qs, I think, are coming into at least that 476 spot. SPY, maybe 536 eventually. To me, the next 4 or 5% is probably down. And I think that sets up really well. So then as we get closer to an actual rate cut, maybe we can go higher. So to me,
you think that's what it's going to? I mean, we've done pretty well without the rate cuts. I mean, do you think that's really going to be the catalyst? Of course, we have some inflation numbers coming out, right?
You're right. No, in fact, if it's for the wrong reasons, right? If it's like because things are slowing down so great, no, that may not help it. So I think the better part that I feel comfortable with is, you're right, that may not actually make us go up. I think the next 4 or 5% is down. Maybe the problem is everyone hopes that, so it doesn't happen, but I'm okay sitting it out if it doesn't. In other words, doing less and just doing these extreme spots like on an NVIDIA when I see a great spot like that, because it offers great alpha and there's plenty of money to be made, right? And catch an ENVX at 10, that's 14 today, or an NVIDIA. We're buying after hours at 116 yesterday. It's almost 122. So I am looking underneath for my alpha, for my P&L, and hopefully the market will pull back to make it more investable. Here, I think the Qs, the SPY, a little bit more down. I know the Dow's leading us. But I don't know, Caterpillar, Boeing, these are not appetizing to me at these levels.
Well, all right, we've been on the line with David Prince from T3. Again, we do have that QR code on the bottom of the screen if you want to join David's free webinar. We also have a link in the description. Make sure to check that out. David, always a pleasure to catch up with you. Always fun to have you here on Pre-Market Prep.
Thank you, guys. Appreciate you having me. Have a great day.
Of course.
Thanks, David.
All righty, y'all. We've got about 10 minutes left. Let's see. Any big headlines? We haven't really done much of the earnings preview. I mean, we do have a Carnival Cruise Line. We have FedEx tonight.
Yeah. Let's preview FedEx.
Okay.
I am long the stock, because I'm long ahead of the reports. I obviously intend to sell it here before the report. It's been drifting higher here the last few days, so we are seeing good strength ahead of the report here as well. I don't know what to say. It's going to be very interesting. Like we used to say, well, FedEx is such a, an indicator. I think you were saying this yesterday, for the overall economy. But now with Amazon doing most of its own shipping, as FedEx and UPS just don't seem to matter as much to this economy as they used to. It misses, it beats, it misses, it beats.
It's all over the place.
On the earnings reports, it's like it's hard to get a feel for where this company is. So I really don't know on going into this report. I mean, I'm glad it's been strong into the report here. I don't know what's going to happen after.
What I'll just say, technically, if you're trading this today or after hours, you get over 260. Look for some potential trimming here. Even that'd be a good after hours number 261. I know it's probably only $5 away and not within the expected move, but I think that's the gateway to 265 or higher. Coming down on the downside now. I mean, who knows how disastrous the report could be, but assuming you have your high in this area from today, we're trading down 26 cents. You've had about a 14, 15, let's call it 15-point rally. So that took you back to the 250 area. I call that minor support here. Let's call it 248 to 260. Those would be the big levels here for today. Don't think we're going to see either. But if you want that, but sometimes, and Dennis, I remember when you were long this FedEx, because and it was back here. It was back in September of 22. And when they came out, boom, with the announcement, they were supposed to report in a few days. It ended up marking the low of the move eventually.
It was down like $50 that day. And I actually got out after hours. I took a 20-point hit. And it was one of the best losses that I could have taken. You lose $20 on something, FedEx, you're like, holy, that's a huge loss. And, it was the best thing I could have did because I think it went down like 50 points that next morning. When they warn, I'm just looking for bids. And the algos take all the first stuff. So it's like, oh, why don't you sell it when it's $3 down? It ain't like that. When they warn after hours, I mean, boom, that thing's down $10 before you even bring it up on your screen. And then you're looking at bids and there's nothing in there. You're like, do I want to hit it down 15? Do I want to try to work it out? How do you do it? Anyways, it was a big
You look
hit,
at this UPS chart. I mean, that doesn't give you a warm and fuzzy feeling.
It's been a disaster, really, UPS. It's been a disaster. And the dividend, has become more and more attractive. It's up to 4.7% here now. But classic value stock, and it's been a value trap as well. And it's going back to where we were 5-6 years ago here. So I do think it's a lot to do with UPS and FedEx weakness, Amazon doing all their... Like, I think about how many times UPS or FedEx 5 years ago, Chuck was here all the time. My wife ordering off Amazon. Now, there's none of that. Amazon's doing all its own delivery. I mean, I think there's just too much competition here happening for them now. And losing Amazon is a huge issue. So I don't know, like, if the stories are as good as they were 5 years ago. They always were talking about competition coming for UPS and FedEx, and it's here.
They do all this different alternative data collection to try to gauge like the strength and weakness of certain companies. There's a lot of different firms that go out there and do that. FedEx seems like one that people should have a pretty good gauge on going into the earnings, whether they're getting data from like the companies that FedEx is shipping the goods for, whether they're tracking the actual trucks, like a logistics company, like a FreightWaves or something. I feel like should be able to determine like, oh, this is going to be a strong quarter or not. But a lot of times those alt data companies will put out reports like that ahead of earnings, and I'll try to trade using them, and then they end up being wrong anyway. So I'm like, all right, well, that wasn't that helpful. But I'm curious if we see any of that today. And then we do have Carnival Cruise Line coming in this morning. We'll be off the air before that, I think 9:15 in the morning. But that might give us some more insights into the leisure and hospitality space. If people are still spending money on trips, or if people are starting to pull back in that area as well.
Well, this one's
15 to
very interesting.
17. Yep. 17's pretty good resistance on this one. We know it can move. And then on the downside, the buyers have been congregating at 15. Not sure what the expected move is in CCL.
Yeah, I didn't look at the expected move either,
That's
but
not a
mixed
big number.
messages here because RCL last time they reported had a pretty good numbers here, and here's RCL been firing on all cylinders, not far from the highs. And then you had like American Airlines, obviously weakness there, and the other airlines have been weak here too. So we're kind of, we don't know if people. This is a very interesting report. Are people still taking cruises or not? What do the bookings look like? I think the earnings numbers will be fine. I think the headline numbers will be fine at CCL. It's what they're saying. What's the guidance look like? Are they seeing bookings start to curtail a little bit here? Or are we still seeing record bookings? I don't think we're going to see the record bookings here. So I'm somewhat worried about this guidance on CCL.
Yeah, I mean, again, like I think you'll probably end up seeing other stocks in the leisure space trade off this earnings too, whether that be hotels, casino. I think the cruise line industry has just been seen as some sort of a proxy to help us understand. But I think, like, my thing is, I feel like the customer base is just a lot different for cruise lines than it is for a lot of these other companies. So we shall see there. All right, 3 minutes left. Again, we mentioned not a lot in terms of economic data today. We do have consumer confidence numbers at 10 a.m. and then around noon, Fed Governor Lisa Cook will speak. It seems like across the board, the Fed officials have been, been pretty cautious about predicting any rate cuts at all at this point for 2024. But again, that's going to be all data dependent. If we start seeing some more weakness, some more companies laying people off, then those rate cuts come back onto the table pretty quickly.
Oil, they wanted to talk, and assuming it's not the Oilers, but just talking oil in general here, been rallying for about 3 weeks here now. Just looking at what oil has done in itself, and the oil stock's been coming back here too. And again, don't kid yourself. NVIDIA's loss is, value in oil and commodities gain here because money coming out of that, looking for a home, looking for value. And, look no farther than Oxy. I bought this thing 5-6 days ago at $59. I got almost the bottom. I never do that. I think I paid $59.50. I got down to $59.13. And, I just was buying because it's a Warren Buffett buy zone.
Warren, yep, the Warren
It's just
bounce.
simple read. The Warren put. Sometimes you just have to have, different reasons. Like, some people just look at charts. And that's all they do is charts, and that's all that matter. I try to do a little bit of everything, like you can look at that chart and say, Oxy, oh, what a terrible chart. It's going straight down. Why would I buy that? Why you buy it at 59? Because Warren Buffett's buying it at 59. And we know he's buying it at 59. There's not very many stocks that we know when we got a Warren Buffett buy zone here. So here I am, and I'm already up 7-8% on the thing. I target was 65. I'm not far from that here right now. So we get back up there to 65. I'm going to unload the Oxy. And then, if it comes back down to the 58, 59 area, I'll do it again. And we've played this, for 2 years on this show. We've been buying Oxy 56, 57, 58, 59, and flipping it out up there in the 60s or even day trading out of it just because Warren Buffett put is still there.
And oil had to move. We were talking about that. Crude oil had to. It just seemed that the big decline. That's lower 70 handle, and then it was like, well, when are the stocks going to go? When are the stocks going to go? And then look at yesterday. Like yesterday's such a day where, yeah, we really peeled off that morning rally, right? And we came in pretty hard. But then you're looking, you're like, I think Exxon was up $2-3. Chevron was up $2-3. I think Meta had a good day. It's still just this like violent rotation where if there's the money's they're selling it, it's almost immediately going back into something else, and just took the crude stocks a little bit longer to catch up. But looking at the crude oil chart here, big $10 move, several up days, 82 seems to be finding some resistance. See if it could take that level out over the next day or two. Yeah, $10 rally here in the month of June. You know what that's not good for? That's not good for airlines and the cruise line. Inflation. inflation numbers. So
Yeah, well, think about all that. Yeah, and it's not good for the consumer. I don't like it. It's boating season. I got to go out and fill up my boat with gas. It's like crazy expensive here right now. They put new tax in Canada because that's just what they do. They just tax the hell out of the Canadians here. But yeah,
why don't you get an electric boat?
well, that's what we should go do. Go find electric boats.
And also, I mean, the summer is just a seasonally strong time for oil demand. So a lot of that may be priced in as well. But all right, guys, it is 9:01 a.m. Eastern. We are
One more stock before we go. ALB.
Okay.
I want to talk Albemarle.
Oh, ALB.
What a
Woo!
disaster. I took the loss on this puppy, and I'm so glad I did. I sold this up at like 140. It's now $95. It's unbelievable the turn. This was obviously one of your major lithium, and EV has just turned disastrous. Besides Tesla, everybody's backing off on EV. So I mean, we went full hybrid here. So you're not as much need for lithium, and that's showing up. I think ALB, it's always been best of breed of the lithium. I think it's going to be, your survivor here. I don't think it's going out of business. I think you get back down in the 50s and 60s where we had a lot of support back in 2019 and 2020. I think I actually might go back into the stock there. But man, the EV bubble that ALB had, from 100 to 300 is long gone here now. And then also, you can look no farther than just interest rates. Higher interest rates. People aren't buying as much, electric cars because it's more expensive. And lithium demand is not as high as it was a couple of years ago. So that is why ALB, which was huge value trap. I looked at it when I bought it back at $200 thinking, how can you go wrong when the thing's trading 7 times earnings? You go wrong because it's cyclical, and obviously those earnings came down a lot.
For those of you that are recently in the stock and don't want to hear Dennis talk about this thing going back to 50 or 60, you got a pair of lows in the same area after a 1, 2, 3, 4, 5, 6-day losing streak. You're on a 2-day winning streak. Maybe you don't have to just bolt out of here today, but if you can hold in here for another, day or two, maybe make another higher low, then maybe you got a chance. You definitely got a number to lean on. That's the low of the move at 92.29. But a lot of red candles in a row, 2 green candles. You know how streaky stocks are. You know how streaky markets are. But clearing that high from yesterday, 96.53, things kind of open up a little bit. So better than talking about this thing. I don't think we'll see 50 or 60 on this one for a little while. It will drip.
And again, I'm not saying going to $50 or $60 when you say that.
Right.
Like, I'm saying if it got down there, it's that's all stock trading is. It's like setups, investing. If you get there.
Yep.
If it doesn't go down there, I don't make any money. I don't trade it. But I'm saying
What a
I think
great
you're
sale
buying here. We've come a long ways. I think it's possible it could get back down there.
All right, boy, we are running super overtime here at 9:04. So let's wrap things up.
All right. Who do we
Christian
got coming up?
Fromhertz going to join us tomorrow.
Nice.
All right, Fromhertz will be on with us tomorrow morning, 8 a.m. Eastern. Make sure to come back and join us on Pre-Market Prep. No ads tomorrow. I'm going to make sure there's no ads tomorrow, so you don't have to worry about that. Hope everyone has a great Tuesday. Stay in the green, and we will see you guys tomorrow morning.